ads. Let's see what market we can take, what is getting prepared for us, what we can get prepared to look at, what we can keep on our watch list. And I want to welcome each and every one of you to this call. So let me just get props ready. But meanwhile, you can get your friends that are interested in making money, that are interested in learning, that are interested in doing what it is we're doing. Just some insight into what market is looking like. Super excited. Doing what it is we're doing. What are you looking at? What are you guys looking at? What are you looking at that is getting prepared for you to trade? How many of you have been trading? You've been looking at the market. So I'm just quickly going to share my screen. And now GU, okay, you're looking at GU. Okay, I was looking at GU for some level of retracement, but just keep bullying up from the last time I checked it. Let's see what it looks like right now. Can you guys see my shared screen? GA was good, sir. Okay. All right, beautiful. So one of the most important thing about the market is for, well, okay, I think was there a little bit of retracement? Not yet. Market is still very bullish. One of the beautiful things about the market is identifying where you want to trade. Now, a lot of traders make mistake. This is my first 2 minutes or my first 3 minutes. One of the mistake or some of the greatest mistakes baby traders make is they allow the market to control their decisions. Okay, and if the market always control your decisions, let me give you a data to go check. When you start in the morning, the market may be bullish in sentiment, okay, but towards the evening it may be bearish. So what that means, the market may be bullish in the morning, or the market may be bearish in the late hour of the Asian session. Into the New York session, there may be a shift of volume and the market may become bullish. During the New York session, the market may become bearish or consolidate. You know what that means? If you base your emotions or your choices or trading based on sentiment or based on market showing you what to trade, you are a prostitute of the market. You know what they call prostitute? I don't need to explain that. All right. The market is, you are a hooker. Okay. And it doesn't end well, you know, if you are jumping from sentiment to sentiment. You know, when one of the things you're going to find out that's going to change your trading experience, or you're going to see that you're making progress, is when you begin to see where the market is coming from and where it's going. The market is always in a consistent journey. Sometimes it gets tired, it consolidates. Okay. Sometimes it needs food, it eats, then it moves. You want to know where it's coming from and you want to know where it's going. And your decision as a trader, this is where the patient of the virtue of patience comes in. If you know where the market is coming from and it has left where it's coming from, you should go wait for it where it's going to. Or better still, intraday factor is, if it has made a move and it gets to a certain location, there is an expectation that it will continue. Find strategies of continuation or breaks to continue to the direction short term. But the main long term of the market is waiting for where it is coming from. So when where it is coming from is ticked, go wait for where it's going to. Sell a market that is finished buying and buy a market that has finished selling. These are part of the tips you want to learn in the market that is going to bring you to a reserve trader, a more, I wouldn't use the word profitability, but I will use the more conserved, more in charge trader, because if you're more in charge, then you're going to see a lot of profit in the market. Does that make sense? Yeah, guys, did you learn anything? And that's really literally what I'm going to be doing with you guys today. Okay. Helping you stay conserved, not a prostitute. Some of you, you've been beaten by the market. I've Just because I'm an experienced trader doesn't mean I don't fall into the prostitute side of the market sometimes. Sheesh. Okay. Like I said, the market is on momentum. It's always going somewhere. So one of the things I said to the team yesterday, this is a weekly area. All right. Watch what's happening. So every area, every candle is an interpretation of what the market has done in a week, in a day. If I'm looking at the week, there's a candle that shows me what the market has done in a week. All right. For those of you that are here, I actually just came on live to let you guys know we are live. Okay, you can't see my screen because this is just a notification to tell you we are on Market Mastery. And if you want to join Market Mastery, just head on to my YouTube or head up to the Telegram link. It's actually in my bio. You'll find the link to this call. God bless you guys. And don't forget to watch the recording. It's rich. Okay, so I'm going to so let me give you guys plain directives. So this is a weekly candle. Are you guys following me? Put 10 if you're with me. You understand? You're with me. You're seeing what I'm doing. You're seeing my screen. And you're seeing what I'm doing. All right, good. Okay, so the market has where we call supply zones and demand zones. So demand zones are where the market buys from. So if you want to identify a demand zone in this market, you're clearly going to see that these areas of the market, okay, has some special. They are special. Okay, weak. So this is a strong demand zone. All right. Now, if you look on the upside, you're going to see each candle. So if I'm looking at this whole candle, it has 4 features. Weak. All right. So the wick is the extension of the candle where it reached its highest peak. Now, if a candle reaches a certain area and comes back from that certain area, it means there was a demand in that area. So this is called a weekly demand area. And this is where the candle, this is the body of the candle, okay? Which means at some point, all right, the market bought all the way here, then sold its way back and opened a new candle here. So there is a data there that shows that there was a level, all right, of liquidity. So watch that. I kept that there. Another place, another feature in that weekly candle was, all right, the base, okay, and the body. So the same thing. So when you see a wick in a bullish candle, it means there was a sell. So here the market sold down. When the market opened here, it sold down. Okay, then bought its way back up. All right, so this is the opening. Okay, this is a sell. So the wick represents a sell in the bullish candle. Are you guys following? Now the wick upward represent the wick downward represent a buy in the bullish candle, while the wick upward represent a sell in the bullish candle. So that's the feature, that's the property of a candle. All right, put 1 on the chart if you got what I just said. So there is data. So what does that mean? This region is a region of a sell. Why this region is a region of a buy? Okay, this region. So it has interpreted that there are buy liquidity here. So now let's take a look at something else. The next week, what happened? All right, the next week left another data here. Okay, so body, same body, left another data here. Okay, body, watch. So this is also a liquidity point, but the week after took out that liquidity and created another one. So every area is an area of data. Okay, now this data is still here, but the week that opened after created another data here. So watch. All right. So what I'm just doing right now is plain Forex. What has price done in the previous week? Okay. So at some point, the week had the sell here, came here, sold, came here, sold, came here, sold. So there's a force in this area, okay, that shows the market is on a sell dimension. So this is where we are right now. So this is the present candle. The present candle is in a previous weekly sell area. So 2 things, when you identify these areas, it means you have data. So one thing I said when I started is identify where the market is coming from and identify where it's going. The moment you know that the market is in an area of sell, you prep yourself for a sell. Okay. The moment you understand that the market is in an area of buy, you prep yourself for a buy. So right now we're in an area of what? A sell. Major sales, not a daily sales. It's a weekly sell. So we are in 1 hour right now, but let's look at today. So this is the whole of today. Now, let me give you a data. A lot of people are not patient in trading, but one of the ways to see this trade through, if it's really going to sell, So it's not good for me to go intraday in a weekly setup. No, I have to allow the day tell me I'm respecting this area. So if today closes in this area right now, doesn't beat this, there's high chance that it's going to respect this. Okay, but if today breaks this area, there's a high chance that it's going to get to this next area. Are you guys following this simple thing I'm sharing with you? Put 2 on the chat. So today we determine if this weekly setup is going to respect. Okay, if I'm trading a daily setup, the 4-hour candle will determine if the daily setup is going to respect. If I'm trading a 4-hour candle, the 1-hour candle is going to determine if that 4-hour candle is going to. If I'm trading a monthly setup, the weekly setup is going to determine if that area is going to respect. So today, right now, is at the verge. Now, this is what a lot of traders do. Now, there's a strategy that says when the market comes to any peak, pick the next peak, sell. Okay, that's probability. It works. Okay, but the sentiment of the day may be so strong it may break. Okay, AUD is very strong right now. USD is very weak. It may break this area. Today's volume may break, or better still, it may still push up. Then before the day ends, it's going to wick back down, which means your stop loss will be at the mercy of the momentum of today. How many of you have been there where you decide, where do I put my stop loss? So there is a trade here right now, but you are now going to be at the mercy of a stop loss. Where should I put my stop? Should I put my stop here, which is good, not too bad? Okay, but what's stopping this trade right now from not reaching here? Why don't you just see it through today, what this market wants to do? So that's one of the ways, all right? I'm in my sell area right now, but my decision for entry is going to be based on what today does. And anything that I am doing based on the assumption of this candle is me assuming that today is going to just sell this week. It can, but there are probabilities that the momentum may still push. Right about now, it's above this area, all right? So what am I looking for? I break it into the down. So there are different ways I can approach this. Okay, so let me look at the 4-hour candle. The last 4-hour candle has respected this area. If a new 4-hour candle closes on this area as a sell, it's a good indication that today it's on its way of respecting that area. So let me give you a clue, okay, of what may play out in the market based on. So the market is at a place of very, very, what would I call it? It has an opposite trend of reaction. If a market breaks a strong area, a strong pull, so you see this candle, it's a very strong bullish momentum candle, okay? And it broke a previous high, which is a daily high and also a weekly candle high. Most of the time when momentum is so strong, there is a break, a retest, and a continuation. So there's every possibility that this candle can close here, come here, find a new support and push way up, which means your potential of trying to trade this area has been short-lived. Because why? If it is here, it hits and close, all right, it's going to fall down because nothing is holding it. All right, but because it has broken a previous high, price action states when a strong momentum candle breaks a strong area of liquidity, it breaks it closed, okay, and it has hit the previous area, the next thing, price action may begin to play out. It will come back here and it will keep going up. You don't want to be at the mercy of this type of place. So Kendrick, when markets are reacting like this in strong highs, what is one of your best approach? Because I would say one of my best approach, because I wouldn't say it is the best approach, okay, is, so if I'm looking at potential, I need everybody to write potential. If I'm looking at my potential for a sell, okay, my potential for a sell between here and here or here and here is not too much. It's very cheap. But my potential for a sell between here and here is crazy, which means my sell dimension does not start from here. Neither does it start from here. My sell dimension starts when this candle breaks back into the zone. Are you guys following? That is when a good sell, protective sell may happen. And if that happens, so let's say this candle respect this area, okay, and breaks into this area, okay, I'll find a high, which is a stop loss area, and a TP area will be way below this area, which is very good. And I will be into a weekly sell. That is a sell. Now, what is another dimension of a buy? Okay, what will I do? So this is on the 4 hour, this is a bullish area. If market has peaked, so the market is all bullish, all right? There's a bullish floor, there's a bullish floor. Now this is momentum. Momentum has broken this area. If this market rejects this area and still wants to buy, okay, I have a simple strategy called the feed concept. Okay, I could take the market from here. So let's say the market respects here, okay, come back into the 60 or the 50%, then you're going to see, okay, confluence, areas of confluence. So 60% are psychological areas in the market that it will go back. Now let's add other confluence. Market, when it breaks a previous consolidation, tends to rise up. Okay, so if you look at the market, there was a consolidation, it breaks the consolidation. If it comes back into this consolidation, that's powerhouse for a bullish continuation. So this is an area I can buy this market. Are you guys seeing the diagnosis of the market? Of the market? Oh, I thought I was doing G. I'm sorry. I'm on so this is me identifying areas based on market structure. How is the market looking? How's the momentum in the market? So I know where to wait for the market. I know where it's coming from. I know it's continuation, and I know this is its extension right now. But how is it going to respect the intention? It may not, because the market is still very bullish. So I either want to follow the bullish momentum, so I have to wait for another bullish continuation, or I'll wait for a sell. I just gave you guys a sell dimension right now. Okay, for me to sell this market, so these are the things that may happen. Because this is a daily or probably a weekly buy, it's not just going to click and start selling immediately. No, it's going to reject, then probably consider, which brings in a consolidation. So the moment I start seeing, excuse me, where's my two? So the moment, so let's say this market hits here and I start seeing it come back, boom. See, this is data. This is consideration. And consideration consists what? Ranging. The market is trying to make a decision. All I just need to do is tap up high, tap up low, okay? Wait for a break of structure, retest of structure, boom, I sell it down. That's a confirmation of a sell. It means it's ready to sell, okay? Because this extension will be relieved by the decision, the consolidation. So when that happens, I can sell. But right about now, the candles are showing me, okay, that the market is still very bullish. Okay, it's not ready to sell. And if I delve in, assuming it's going to sell, that is my gamble part of trading coming in. Okay, which sometimes work, but it's not always sustainable. Are you guys tracking? All right. So this is what I want to look out for. So this is my buy. I'm going to give you guys AUD USD. You can decide to save this setup for a buy. When market comes back into the zone, okay, we'll take it up. Okay, this is a buy zone. Now, when market, so price structure or price action has to play out for me to sell. So I'm looking out for a rejection, a consideration, all right, which is going to cause a range. Then when it breaks this level, so this is the level I want market to break, then I would look out for my sell. It means I'm selling the market when the market has started moving for a sell. I'm not just going to assume it will sell. I will sell it when it is selling. Right now, it's already buying. So I know where to wait for it for a buy. Right now, it has not started selling. So I have to see it sell before I sell. I don't know if you think this makes sense. Okay. I don't know if you understand this simple analogy. I don't know if you think it's simple. Put simple on chat. Okay, so this is one way you can treat the market as a friend. Don't treat the market like you are a dictator. You want it to do something for you and you just analyze, okay, you market do this, then it will do it for you. No, it doesn't work that way. Okay. Why is this not deleted? All right. So take note of where is so I love to put either the 50% or the 61.8. So those are two areas I love to keep in my chart. Then I can take the noise out. All right. If you have any question, you can actually let me know you have a question on the chat. All right, but this is my buy area and this is actually my sell area. Okay, so when I see market pulls this, so maybe let me use this to illustrate here. When it breaks this area, retests this area, I'm selling all the way. Now, when market confirms the sell first, okay, there are chances that it may break this area. When market does this, it may break this area. So you want to be very careful, still thinking, okay, this will hold. If this market comes back immediately with a full, maybe 4 hour candle, yeah, this will hold. But over a period of time, if it holds a consolidation, maybe 1 day or 2 day, then it now breaks. Don't think this area will hold. All right, because the whole goal of a momentum retracement is immediate. It doesn't take time. If it takes time, the structure has changed. Okay. So when you see this retest, don't pretty hope for this that much, except you see probably a week out, a 4 hour confirmation, then you may try, but don't hope for the best. So don't hope that will be the best. Always hope for the best, but don't hope that will be the best of wait. Was this an amazing setup? How many of you like this? All right. So, and the same thing. So when you see me put this area, this means don't forget everything I analyzed below here means these are bullish areas. Okay. So when market comes into these areas, you should be looking out for a buy. Leave your sales and look for buys within this area. You can keep this setup for a whole week, a whole month. It will still be valid. That's a beautiful thing about trading these strategies that I'm showing you right now. It's not literally a strategy. It's actually a way of outlook, market outlook. Just look at the market, strong perspective. Okay, then find your ways of getting in. All right. So let me go to GU, guys. That I've done GU before. I think I kept GU. Okay. Let's see. Okay. So this is my GU outlook. Okay. So this is my buy zone. All right. This was supposed to be a sell zone, but this strong bullish momentum. So it didn't respect. The only time I respected was last week. I told you guys last week. I gave you guys this trade last week. How many of you traded it and you made money? Okay, I know you're not faithful. Many of you are not faithful. You won't tell me you made money, but it was on the live session that I called this trade last week. Okay, and it sold all the way, sold over 50%. Okay, and now it's coming. So where is it going? What's the next point of reaction? So let's do the same thing. Okay, so this is a major area. So the same thing I did. This is a major sell area. Okay, let me look at the day. All right. Okay. So based on the day, this is an area. Okay, which an area confirms. Let's look at the week. Okay, so these are all levels. Wow, these are all levels of rejection. It means there's a force within this area. Okay, and the highest of them in this whole week is this and this. Before we see this and we see this. So this is the major for the week. All right, major high. Then after this high is this high. So you can see I kept the level. So that's where market is going to. It has kicked off. So this is a liquidity area. All right, touch, it's moving right now. So means market has moved. So what is the next point in action? Okay, so market is presently from this move, from this high to this low. Market is presently approaching its 50%. It means that's an area of exhaustion. And when there, when there is an area of exhaustion, begin to watch out for range. So if you look here right now, market is almost approaching its 50%. It means there's going to be activity. There's going to be a return. Okay. And if it starts returning, it may be for the continuation. So let's break it down. So what might happen based on what this candle is doing here right now? Okay. That's why I did this analysis. I look out for a consolidation, then a continuation. So this is the consolidation. All right. If market comes back into this area right now, I'm going to look out for a buy in this area. And I love this. So this is, so market is going to get here and just watch out. Take these levels. I just take this. What's this? Why is it not showing it? Why is it not showing this at the end there? Kill it. Okay, is this a, okay, this happened to be a Fibonacci level. Okay, 1.27. All right, if market hits there, if you see a rejection, it means market is going to come down. So wait for the down. I'm not saying this is a sell area. That's a 50%. It means market will exhaust. But I don't find good sales there right now. Okay. I just want to see the exhaustion. If it exhausts, I need to follow this market back up. Because why? It's in a journey upward. So where am I going to get in for a buy? Okay. So two ways I can get in. It broke a structure, come back into the structure, respect the structure for a continuation. So that's one. Okay, market maybe hit here right now, come back into this area. You're going to find a strong consolidation on upward. That's one. Another is my fib levels. So market, since market has created the low here, if it comes into this area and respect, okay, market may want to play this move, which is also a break of a structure and a continuation, because there's a structure behind here. Okay, you can see. So, and market, if you look at this right now, market broke, retested, it's going. So that has already maybe simply just happened. So I would, because this is taking out, I'll probably be more patient for this, okay, compared to this. But if I see a confirmation on this, I may take the trade. All right. But let's just see. That's going to be dependent on if market respects this area. Are you guys following? All right. So hypothetically, if market responds to this area, then this will be valid. But if it doesn't, let's say keep going up, then we'll find that low. So right now, we just want to see. I just want to see, okay, how market is going to hold, because I don't have any valid way of getting in for a buy right now. It doesn't make sense that I'm buying a buy, already bought market, okay, when I should be waiting for a sell. But it's not close to my areas of sell, so I need to join in for a buy, okay? So likewise, this is 60%, but this is not fib concept, so I'm taking that out. I just needed to find the 50% exhaustion area to know what this market is going to do. All right, so if it respects this area, then I'm going to be looking out for a buy for continuation to this upper side of the market. Going to be a beautiful sell. Going to have beautiful sell with beautiful sell. All right, I love that. So, and another thing in the market that you have to realize is when market creates momentum, they're almost equal. Okay, so I want to do something right now. If you look at this candle, all right, if you're looking at this momentum are almost equal. All right, they are almost equal. Momentum are almost equal. You find this? They're almost equal. Now, this momentum may actually still go up. Okay, possible, because this momentum started here. When the momentum started here, it came here. If you're looking at this, when the momentum started here, it came here. All right, the momentum started here, and it's almost equal. So if I'm just shifting this to this side, you may see candle. This may actually still break this and come here. And if that happens, you may be seeing this high. So another thing is to look out for the type of momentum that is replicating. Okay, and that's when you start buying or selling, that is going to be the measure of your TP. Okay, so if I find a good reserve, well, this is not for today. I'm just trying to show you when market push up here, then you're going to be, this is going to actually be a strong valid point, all right, for retracement. So this is my setup on G so far. For buy, I'm going to wait for these areas for buy. For sell, the market is actually coming to this area. So continuation, I'll follow this market continuation to go. So that is my interpretation on G so far. Sense? Put sense on the chart if you got that. So what other pair? Now that I've given you guys a simple way of looking at the market, you know, I told you guys last night, I want to start teaching you strategy that is going to help you be more of a reserve trader more of an aggressive trader, because aggressive traders without proper psychological management loses more in the market. Are you guys following? So if you learn this and you master it, document it, get 1 or 2 pairs you're looking at every week, you're going to find that your result on your demo would easily align in your live account. That is if you can get a demo result. Okay. Any questions so far? So I'm going to leave you guys to give me what do you guys want me to look at? All right, using the same template. Okay. This is the same thing. The market is doing the same thing across board. So the market is in a what we call is in a deceitful time. It's preparing. Momentum has happened. You don't trade the market when it's on momentum. Okay. You wait for it when it's on momentum. Okay. And you analyze it for continuation. So you don't trade it. I can't trade this market for a buy. Neither should I get in for a sell right now. It has to come to the area of sell, because momentum is what drives the market to location. Okay. So if you miss momentum, you missed it. Wait for it. It has happened. Sometimes there are 2 momentums in a week. Sometimes there are 1. Every day does not bring momentum. So today may not be a day for trade for us right now, because why? It's not close to any area. Okay, for me, if it was somewhere around here, it's only AU. So AU has come to a location, but you cannot trade it because it's still on momentum. It has to show you that I'm respecting, and the day will tell us. That's why I told you the day candle. If the day respects that area on AU, then you know that the momentum is reserved. Now, strategy for not continuation, for reversals will not start happening. Does that make sense? You say, do we have a recording? Yeah, this is recording on YouTube. Okay. Okay, you guys don't have anything you want me to look at? No question? So EU is at the, okay, let's see EU. Okay, so this is an old analysis. Let me clean it up. I'll look at it. Let's go to the weekly. Where are you? Okay, you still have some. Okay. 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 So this has broken the previous week, which means this is on momentum. Don't kill it. So except this week comes back in, it's still in. It's above this already. So this week has broken, taking out the liquidity here of this week. So we're above the week. So what is the next week high? This is the next week high. Previous week high. So these are the areas market may tend to come to. Okay, so that being said, if the day has already, okay, the day, if today confirms the break of this area, then the weekly is confirmed that it is broken that weekly zone. So this candle is going to determine if the market is coming here. So if that happens, then we'll start looking for a buy. Okay, if the day breaks above this area, then we'll start looking for a buy. Where can we buy? All right, that's when we come into the lower time frame, find an area of consolidation that the market has broke. So this is not really ready yet. I think I have a feeling that it's going to come down. Okay. Or it's going to go retest. So this is an area of retest. But most of the time, so if this candle closes here, then we're going to have an area of inefficiency here. Okay. Yeah. That's a fair value gap. Yeah, then it's going to be a good point. When it goes up, it's going to come back to take away this liquidity. All right. It has done this out. Let's see this. Okay. So this is the bridge. It's broken the bridge. The day we confirm. If the day confirm a hood above, then we start looking for signals on G for a buy. If not, then you should start looking for a sell when it breaks this area. So this is a sell. This is a sell confirmation zone. When this market breaks this area, then it is in for a sell. Okay. But right about now, it's still bulls. This is the neck of the buy. This is the head of the buy. So it has broken the head. You continue up. But if it breaks in, okay, you may want to consolidate within this zone, but if it breaks this area, you should look for a sell. You should look for sales. So this is my point where I'll be looking for sales in EU, but right about now is buy. Okay, so that's that. Someone mentioned GA earlier. Oh, GA is bearish. Okay, it's at the head. It's at the buttock. Market is at the buttock of this should be a weekly zone, I believe. Okay, so this is the weekly zone. Same thing. All right, it's breaking. If today confirms this, okay, this is a weekly. Okay, so if this week close below this area, then the next weekly low, all right, will be here overall. But it's candles after candles. It's gonna start. These are the bus stop. So it's gonna come here, then it's gonna, all right, come to this area of extension. So every candle is data. So right about now, if this candle breaks this area, the previous week is going to probably come here. And yeah, the same way it went up, it's going to come. So the high of this market is here. So this week is going to determine if it has broken. But right about now, it has taken out the liquidity of the previous week. So the same thing, the day. So if this day closes below this area, then you're going to have you to contend for sales. Market is going to keep selling. But if it does not, the bulls will take it back. And what you start seeing is now, another thing I can tell you, the way this market looks, it's pretty good. If a day candle closes as a bullish here where the market is, you should look for a buy. If you have a daily close. So let's say this market buys back in and close as a bullish, not this present candle, the next day, which is tomorrow. Okay, so let's say this one respects right now, and the tomorrow candle opens. That's a swing buy. It's a powerful swing buy. You don't play with that. Okay, but yeah, but I really think that will happen. I think this market is coming all the way down here. It's almost like a throne. Okay, this is the pillar of the throne. These are all the other markets. The way it's looking is gonna come down here. So this is how you join in. Market is going to come here, probably come to this area, find good entry, swing it down. So that's not happening right now. So you can see that from every analysis, market is preparing for the next move. Okay, the wave of the move has already happened. So this is the time you analyze for the next move. Are you all tracking? Okay, so I'm also going to keep GA in my watch list. So if GA today, all right, closes this candle respecting this area, you can look out for a 4-hour bullish or a daily bullish, which is tomorrow. Okay, the more patient you are, the more likely correct you will be. Any questions so far? So I've given you guys, at least I've been able to look at 3 analysis with the eye of the eagle. Okay. So with that being said, that's going to be my time with you. I hope you guys learned something. If there's any question, I'm going to sit here within the next 2-3 minutes. So you guys did not give me anything to look at. Can you please look at gold? Someone say I should look at gold. Someone is. So I should look at gold. All right. So gold is in an all-time high, all-time high, all-time high, all-time high, and all-time high. When market is in an all-time high, you don't have data. It's all going to be based on economic. So, right. So let's go back to the simple basics. All right. So it's in an all-time high. You shouldn't be looking out for a sell because you don't even know what to sell. You agree with me? Okay. So so it's in unknown territory. So all you just need to do is look at areas of liquidity. So there's a liquidity here. There is liquidity here. Okay. Since market moved from here, okay, never came back to this liquidity, created new liquidity. Now market has moved. I'll show you something right now. So there are strategies to just look at where could we have liquidity pools. All right. And so this is strong momentum. Okay, so there's strong momentum, a little bit of consolidation. So this is another momentum. So I have momentum. Okay, taking up. You have this. So one of the things that literally could happen is you look areas of inefficiency. All right, you just start creating them. And one of the things, one of the ways to look at areas of inefficiency means liquidity that the market is yet to approach. You start looking. I know many of you probably don't know about fair value gaps. Okay, that's something that I'm looking into right now. They are kind of like areas of where market has moved on momentum. So every momentum leaves liquidity in the market. So, and one thing about the market is seeking out liquidity. So wherever there is liquidity, the market will go to. So what you literally do is not really that I'm going to teach this here. I just want to show you that these are different areas of liquidity that the market has created. Some it may have closed in, taken out, some it may not have. So if you're looking at this momentum, okay, so we had this is a momentum on a 3 candle, and this was taken out. So the difference between a candle, a 3 candle high. So let me just, if you're looking at this candle, okay, it created a wick. You look at this next candle, it created a wick. You look at this third candle, the wick. The difference between this wick and this week, it was not mitigated. So you have a gap between here and here, okay? These areas are kind of like liquidity that are, they call it fair value gaps. Most of the time, they are adopted liquidity areas. Market tend to prove them. So let me do this quickly. So this is a 4-hour fair value gap. Let me quickly do this. So it's good. You can use things like this when you don't know, okay, where to buy the market. You just create different areas that the market can possibly buy. Where is my settings on this? Okay, good. So we'll go up. We'll go up. So this is another 3-candle factor. Week, week, week. This was mitigated. All right. You look at this week, candle, week. There is a small, it wasn't mitigated. So between this week and this week, there's a gap here. Okay. Now you go up again between this week and this week, there is a gap. Now, this is what I'm trying to tell you. You can see exactly what I'm trying to tell you right now. Okay. So market tend to, when it creates a fair value gap, okay, market tend to come back, take them out. So you can see that this was mitigated. So this is no more there anymore. That's mitigated. So we go into the momentum again. All right. So this is taken out. All right. This taken out. There's no gap here. Hold on. Yeah, there's no gap there. Okay, so let's look at the momentum again. So we have, yeah, we have a gap here. So we can't look at this because this was taken out, this mitigated. So, but between here and here, there's a gap. There's an area of inefficiency. Okay, you watch out for that. Why am I putting this? You watch out for it. It's very strong. Okay, so let's look. So there is a gap between this and this. You watch this. There's a gap between this and this area, but yeah, kind of taken out. Did I see this well? Between this, yeah, this was mitigated. Yeah. So this was liquidated out. So yeah, the market is where it is right now. So the next possible place for me to buy this market is here. And if you look at that, you add all that confirmation, the market tends to always reject in the previous ceiling. So if I have this, okay, if I have this, and I look at this, all right, you see that there's a previous ceiling. So that's a false. So it may hit the ceiling and go back, but if it, most times this liquidity will pull it. So that's why you see sometimes you can do a previous region. It will break the region, but immediately just come back. If you look closely, it's either there's another block or there's a fair value gap. It will always take those liquidity, those areas of inefficiency. If they are close to your structures, your price zones, always watch out. So this is going to be good if this market comes here and rejects, and it's just going to go back. And one thing about this type of strategy or approach is it gives you clarity of the type of risk you should use. Okay, so if I'm taking a trade here, I don't need to come and put my stop loss here. It doesn't work that way. When you're using this type of inefficiency, it means that's where there's liquidity. If it does not reject that liquidity, then it's breaking. It's going to go. So that's how this type of approach is. So if I'm taking this trade here right now, my risk factor is going to be, so if I'm longing, okay, so let's say I'm buying here, my risk is just going to be maybe slightly below here, which is, yeah, this is it. Okay, and the next target is going to be the, all right, probably this high. So you can see that that is a 1 to 8. So it reduces your risk factor because you're actually trading liquidity. Okay. I know this is new to some of you, but it's in the play. I told you that this week I was going to, this week, next week, I'm going to start giving you guys activity. So that's gold for you that are so good. You could use it, all right, but that's gold. Okay. Now there are ways I want to be confirming. So what I'm doing is I'm working on a strategy that will put the confirmation of our FIB concept, market structure, and fair value gap. And most of the time, okay, they are accompanied with other blocks. So between now and the next 2-3 weeks, okay, I'm going to be giving you confirmation. So it's like having a list of confirmation. The higher you have tick confirmation, one of the things you're going to find out is the higher the strategy is going to play out, the trade is going to play out. So I'm just going to give you a checklist of confirmation, and I'm going to train you on how to use them, okay, over the days of our personal trainings. Thursdays, Monday night, then yeah, on Thursday afternoon, Monday night, okay, then Tuesday I'll give you guys some demo on Tuesday. All right, are you guys excited? I mean, if you love what I just showed you. Okay, so you keep this in big gold. It may not happen anytime soon, but just know I said this. Gold comes here, watch out for strange buy. Okay, strange buy. That's if it needs to continue. But at the same time, you would watch how it came down really matters. Okay. So because it's in a strange area, what is really taking gold up is the same economic factor that is driving Bitcoin. So they're moving alike. So most times it's not technical analysis. It goes beyond technical analysis because there's nothing technical about this analysis right now. It's not in a technical area. It's just moving up. It means something is shooting it up. So it's not where you begin to dance with fire. Sometimes you're just wise and respect yourself. Don't treat yourself like a bank manager when all you do is save money in the bank. All right. So any questions so far? Yeah, we're right on time. I hope you guys enjoyed the market. Did you guys enjoy the market, the training? It taught a lot about patience. Am I correct? I mean, if you felt like it's good to be patient. So many of you would have been looking for, oh, what do I trade? What do I trade today? Just found out that the market was not ready for a trade. It already traded. So if you didn't catch the momentum and you're trying to chase it, 60% of the time you're going to be faulty with your decisions. So trading is about identifying the right position and waiting for it. We just be. God bless you guys. I'll see you guys tomorrow. No, I'm not seeing you tomorrow. Tomorrow is my rest day. So when am I seeing you? On Thursday morning, binary time.